Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, December 23rd, 2022. So, doing this one a little bit earlier than the close, but I don't expect much to change here on the day before Christmas. So, I wanted to show you guys on the YouTubes a little bit of a snapshot of what I showed the folks in the premium room, and that is mostly longer term signals that I'm looking at. There's going to be a little bit of a short term signal that I'm going to show you as well. It's very low probability, but it is in the cards, so you should be aware of it. But mostly I just kind of want to focus on longer term signals. So look at the last time that, well, let me start by tracing in the 50 week simple, right? And then look at the last time that it tested it was right here. And the last time that it tested it, it failed and it gave you a sell signal, which drove the market from here to here. It tested it again, and now you actually have another sell signal here. It actually tested it last week, right? So what do you have? Well, you have a weekly 50 that is acting as monster resistance. You have lower highs, and at least so far, you do still have lower lows, right? So the structure is bearish. The trend oscillator is bearish. The high-low pro is bearish. Let's go to the daily chart, which is on the right. On the daily chart, the structure is bearish. You can call it neutral because it has been sideways for a long time, but it would be then bearishly neutral at best. The trend oscillator is bearish. And the high-low pro is also bearish. So you would think weekly, daily, telling us the same thing. Bearish, this thing has no support underneath it really, right? So if you kind of look at a little bit of a support level here, underneath that, what do you have? You have absolutely nothing until about 350 in terms of support, which I don't think actually will hold if we go back there. But yesterday's candle, the near-term signal, is actually an interesting one. I don't know if it's going to be bullish or not. It certainly doesn't feel bullish, but it is there is something there, and it's worth your time knowing. So let's zoom in on just the recent action here at these lows. So if you look at the recent action here, what did yesterday's candle do? Well, here was your previous lows, right? So you stretch that across. And yesterday's candle closes this open gap and stops out folks below the lows and then closes roughly at the previous, not Wednesday's, but Tuesday's close, right? So yesterday's candle had a dual kind of effect. Closes the gap, flushes the market, gets new shorts on a break of the lows, and then closes relatively well. So the question that I have is this going to be a bear trap? A bear trap basically is exactly this, where you have a level, you break below it, it invites new shorts, it gets the longs to stop out, the weak longs, and then it closes well, and then you can go back this way. Very similar to what you had up here, where you had a bull trap, close back in range, and a flush. Right? So it would be appropriate that a bull trap up here would be reversed by a bear trap here. What are the parameters to get this thing going? There's two levels here that are very big. In the near term, the smallest level that needs to be retaken, 385. In the longer term, the level that you need to restabilize the entire market, 390. The signals here are not good. I do want to stress that. Everything that I've shown you here is screaming like flashing red lights bearish, right? So this is the probability that this this bear trap plays out and we just do this is very, very low, but you should be aware of it. Let me show you the longer term signal, and I'm going to show it to you with Apple, and I maybe showed it to you last week, but I'm going to show it to you again because it really is that important. There's actually a setup under the market right now that is very, in my opinion, very similar to 2008. And we've talked about this on the YouTubes with you guys for pretty much the entire year. You know, you can go back and watch almost any video that I've made here, and you know, we've talked about this dynamic playing out, and it certainly seems to be coming in 2023. Can't have all the fun in 2022. So this is Apple. Apple is the last thing left standing. So keep in mind how bear markets work. Bear markets will start by taking out all the dog shit first. What is that? It's going to be the Zooms and the Pelotons and the Rokus and anything that Cathie Wood has ever touched. They take that out first. The second thing they take out is the mid caps. The third thing they take out is the large caps. And then the last thing they take out is the market generals. So that would be your Teslas. Absolutely bodied this week. The Amazons, down 50% this year. Netflix, don't even look at it. Meta, same thing. Google, not as bad, but still taken down. Apple's the last thing left standing. And even then, it's really rocking here, right? So even if you don't know the indicators, you can tell that a falling red line and a falling green line with the red on top of the green is probably not a good sign. That's probably confirming a bear trend. If you then look at the lower indicator and say, well, do we get any conflicting signals? Because this says down. Look at all those red arrows there, right? So those are very, very heavy signals, especially in the face of a squeeze. Because when you have a squeeze, that then adds directional impulse to the directional indicators. And everything here, from the moving averages to the trend oscillator to the high-low pro to the squeeze histogram, is screaming bearish. So the level here on Apple is actually 130. Right? You got to hold the 130 level because, and this is the problem for everything in the market and why things can get really, really dangerous next year for longs, is below 130, you now have this massive topping pattern on Apple. On everything else like Amazon and Tesla and whatnot, they've already broken these patterns. So the Tesla and Tesla and Amazon and the rest, they're already down here somewhere. Apple's the last thing left standing. If it breaks this solid green line here where 130 is, you don't have any support underneath it till at least 110. The problem with that is that you also have a monthly squeeze with first downward bias in probably years, certainly years, right? And you can go back and check all that work. So if, and it's more of a matter of when Apple breaks, it will be the last thing that takes down the entire market. So in the near term, understand the bear trap dynamic that was put in yesterday has potential. It has to at least take 385, and then it needs stability above 390 on SPY to do anything with that. The higher probability setup is that it will just break short. So don't prioritize a short squeeze or a bull run because that's not what the indicators are saying. But also keep an open mind that if they're going to reverse this, it starts exactly like it started yesterday, right? With that big panic flush, the strong close, the trap, the closing of the open gap. But more importantly, so I can reference this video in the future, understand the signals here on Apple and understand that these signals are, I've never seen heavier signals in my life on a more important stock than this, right? So one last time, we could just focus here on the 3-day chart. It helps if you have the indicators, but even if you don't, you guys all know, you know green and red. The squeeze histogram pointing down, the moving averages pointing down, the trend oscillator pointing down, and then the high-low pro just shotgunning red arrows like it's nothing. So if and when this breaks, and it's more a matter of when, this should go down to about sub 110, right around 110, and that would imply probably about 16 to 20% downside in the market. So again, be aware of that. Even if it doesn't happen next week, right? Keep in mind the near-term setup is one that's trying to turn bull. Doesn't mean it will. The probabilities are low. But even if it doesn't happen next week, understand these signals are in the back of the market. They will take time to play out, but they are incredibly meaningful and severe in the amount that you could see this thing drop. So in the same way you've seen Tesla drop basically in a free fall for the past couple of weeks, you could see the entire market do that if Apple triggers short off of these signals. So understand that, understand the short-term stuff, and we'll see what plays out next week. and we'll come back and make sense of it next Friday. All right, guys, that's my time. Be sure to leave us a like before you go somewhere else on the YouTube. Before you click on a cat video, leave us a like. Also, if you're not subscribed, what are you doing? It's free. Click the subscribe button. It allows us to have more folks look at our content. So if you find it helpful, it does help us, and it's free. And aside from that, guys, I hope you have a great holiday, Merry Christmas, and don't forget to hug your dog and pet your cat and feed a squirrel. And I'll see you guys again next Friday. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.